Ashwini Agarwal joins us and let's connect with him. Let's take the market conversation forward. Ashwini, good morning. Thank you for joining us. Thank you for joining us last evening as well. It was really great to host you. Uh, Ashwini, one looks at the market setup. The market setup is absolutely mesmerizing. Who would have thought that out of all the things, PSUs and small cap stocks will come back by 15 to 20% from the lows of 4th of June? Why is that happening?
So, it's a combination of who's driving the market and the fact that there's very little supply, and of course, coupled with the new government's comments that it's going to be more of the same of what we've seen in the previous policy. There's obviously a lot of focus on the government to drive the investment and revival in the defense industry and pursue the export opportunity. So that's what's exciting investors, and there's very little supply. I would have imagined that given these valuations in the PSU space, the government might want to increase its disinvestments targets, but we didn't see that in the last financial year, and I don't know whether the government plans to do that this financial year or not. But honestly, the valuations are quite eye-popping. No matter which way you cut it, I can't get myself to agree that the valuations leave room for upside. But as we all know, bubbles have their own mind, and bubbles can get a lot bigger before they burst. So who knows? There may be a lot of upside.
You were there at the event. Every
Yes.
narrative which was centered around growth, visibility, whether it is from RBI, SBI, Puneet Chatwal, Manish Chokhani, every market man we spoke to. So if growth is looking so solid, and if we are
Yes.
in for more surprise on the earnings front, then why worry about bubble and valuations?
So you have a point. And if you recall, when we spoke last in early May, at that time also, my view was that, there is really no cloud on the horizon. And that was reiterated at the ET Now conclave last evening, where the RBI governor and the State Bank of India chairman pretty much said the same. So yes, India is poised for growth. Corporate earnings are looking quite healthy. There is no stress on corporate balance sheets or bank balance sheets. Inflation is a bit of a worry, but it's hopefully the worst is behind us, as the RBI governor said. So there is no reason to worry. I agree with you on that. And of course, bubbles are, like I said, can get a lot larger before they burst. But the point is that history tells me, and I go back to 99-20, I go back to 2007, 2008, I go back to 2017, that the biggest mistake as an investor I can make is overpay at the point of entry. If you overpay for a stock at the point of entry, the chances that you lose money or you don't make any money over a long period of time becomes higher. So I'm not saying that you don't have investment opportunities in this market. All I'm saying is that there are certain pockets of the market which are enjoying euphoric conditions, and where investors need to be a little careful because valuations don't support the stock price.
Ashwini, hi, morning. Good to have you on the show. Ashwini, just wondering as to what could really sort of be the cloud or burst the bubble, if you will. And I guess the next event that the market is going to watch out for is going to be the union budget, right? The first from the Modi 3.0 stable. And I was just looking at some of the data points. The long-term capital gains, as well as the short-term, has been the highest growth income category in the last few years. I mean, fingers crossed, but I sense why the market fears that hope that's left untouched. What's your anticipation?
See, I don't know. Okay, I don't know what the government plans to do because, if you recall, there were comments by the finance secretary earlier on in the year, and as well as the finance minister, which said that there needs to be a rationalization of capital gains taxes across asset classes, and maybe they need to be brought onto a common platform. Now, what does that mean? I have no idea because, I don't have the breakdown of how much the government collects from, for example, real estate capital gains, or for example, from gold sale capital gains. So my my thinking would be that the government would want whatever rationalization that they propose to be revenue accretive or at least revenue neutral. So these things, I don't have the data to make an educated guess. So let's see whether this happens this time or not. One big change is that unlike the previous government, this government has coalition partners, and it will need to carry the coalition partners with it if it were to propose a big change to the capital gains tax regime. And also that you have the Maharashtra state elections coming up. So whether the government is ready to do this now or whether they'll wait another year, I don't know. So yes, it is a risk, and it's an event to watch out for, but I don't know how to position for this, quite honestly.
Okay, fair enough. Ashwini, let's also understand what the outlook is when it comes to the entire, the spaces that command fairly high valuations, for instance, be it FMCG or pharmaceuticals. And one would imagine that when the market is seeing a bit of volatility, these are the spaces to cushion your volatility. But how would you look at the moves that we've seen within the space, the valuations that they command?
Yeah. I think the narrative on rural demand seems to be quite optimistic relative to what we've seen in the last 2 or 3 years. I mean, being optimistic on rural demand doesn't mean that it's going to be gangbusters, but the kind of low single-digit growth that we've seen in consumer name revenues, for example, might be a little bit better, maybe late single digits or early teens. The margin environment has been quite benign for a few quarters already. So you might see a revival in earnings growth in the consumer space. What you say is correct, that some of the consumer names are actually quite expensive. But if you look a little deeper, there are a few stocks which do offer value. So, my suggestion, or at least what I'm doing, I can't make any suggestions. What I'm doing is looking deeper to find where I can get some growth and at reasonable value. And similar the story for pharmaceuticals. And pharmaceuticals, both the retail sales are doing well, and the pricing pressure for generics in the main market for Indian companies, which is the United States, is more benign than what we've seen in the last 3 or 4 years. So there again, with a filter of valuations, I can see opportunities. But I think to my mind, one of the big opportunities is actually in the banking space, which has, not done as well as several other sectors over the last 12 to 18 months. And I think the environment is very, very benign there. I mean, the SBI chairman said as much at your conclave last evening as well. So I think, that might be another space where one can look for some ideas, where valuations are quite reasonable, actually.
Continuing with that, Ashwini, where is it that you finding valuation comfort right now? And would you say that private banks is the only pocket as of now?
I would say banks and NBFCs. I think there are some PSUs and private both, and I think some of the NBFCs as well. That's one area where I'm finding a reasonable amount of valuation comfort. I think there are a whole bunch of stocks in different sectors. It's chemicals, it's fertilizers, agrochemicals, it's pharmaceuticals, some of consumer names, some manufacturing names, where I think there is a reasonable growth, and you're not, paying a lot for growth right now. You're not paying over the top. So I think this has become again a very bottom-up market. Sure, there are some themes running, such as the PSU, defense, railways, and like I said, that's, in my personal view, that's a bubble, and how long it continues or how big the bubble gets, nobody knows. But outside of that, I think there are a lot of places where you see a reasonable outlook. This is not to say that, markets are not expensive. I mean, they are, a little above median from a long-term perspective. And who knows, if there is a big shocker on the capital gains front, you might see a correction. So we'll have to navigate all those short-term issues, just as we navigated the election results. And I think broadly we still find opportunities on a bottom-up basis. That's what I would say. But sectorally, those are some of the sectors that I like.
On that note, we'll let you go on there, and thank you as
Thank you so
always for
much.
taking the time out.
If you like this video, then like, share and subscribe to ET Now.